Welcome to Short View Trading. This is your morning market hit for Monday, 11th of September. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And what we want to dig into in this video is how do you go about trading equity index futures on a 1 to 2 week basis? Whether you should be long or short and what factors should drive that decision. Whether you're thinking about investing in S&P500 futures, NASDAQ 100, FTSE DAX and so on. What's the setup? What do you need to look at? What factors really matter? That's what we're going to talk about in this video over the next couple of minutes. So last week we talked about the idea that markets were likely to start weakening again and pull back over the course of last week. And as you can see from the global equity index chart in front of you now, that happened. And over the course of last week, over the course of the 6 trading days of September so far, we've seen a bit of sogginess in global equity markets and in the key major equity indices. Indeed, if you look at the performance of US equity markets, you can see the S&P 500 month to date's off just over 1%, so modestly lower. The NASDAQ a little bit more, about 1.4%. And then other parts of the US equity market down quite meaningfully, 2 or 3%. If you look at the mid caps and the small caps, as you can see in this chart that's in front of you now. So weakness started. We saw it also in Europe, some softness across some of the indices there, down about 2%, a bunch of them. Whether you're looking in Spain or Italy or other parts of the European equity market. So weakness beginning over the course of last week, which leaves the key question, is this going to evolve into a proper wave 3 pullback? Or actually is that softness we saw last week an opportunity to jump on the long side of this trade? Indeed, as we've been laying out in recent videos, most pullbacks have 3 waves. That's the typical pattern that you see. An initial wave 1 of selling, like we saw from the early August highs, late July highs this 6 weeks ago, all the way through to the August 18 lows. That's your wave 1 of selling. Then you get a wave 2 relief rally as the market bounces and takes back, retraces some of those initial losses from wave 1. As you can see on the chart, that's your wave 2 relief rally. And then you start rolling over into the wave 3. So the question is, have we started that wave 3 as of last week? Or as I mentioned earlier, is that actually an opportunity to get long in this equity market because we've now given back a bit more of the gains and the upside is so strong that we're not really going to get a proper pullback? And there's a stack of clues that you can look at and that we examine each and every day in the Daily Rag, which we'd love you to take a free trial of. Just click on the link below. But one of those clues is what's happening in the price action of the leadership stocks. Whilst we like to look at a whole bunch of trading models that we lay out each and every day, we also like to look at the price action of where the key action is in equity markets and across global asset prices. But in equity markets, of course, the leadership stocks of the first half of this year are starting to look troubling. They're starting to struggle. Apple is the classic example, of course, the cheerleader of this rally in the first half of this year, but also terrible price action in the last few weeks. Just look at the chart up in front of you now. It broke its uptrend a number of weeks ago, and then it tried to push back through its 50-day moving average over the last 10 trading sessions, and now it's rolled over and gap low. Now, of course, that was on the back of some Chinese news flow with the Chinese banning Apple purchases within some of their parts of their government. But that's not the only story here. This is a failure to break through its 50-day moving average. It technically looks quite weak, and it's confirmed, or at least potentially confirmed, by what we see in a number of the other mega cap tech stocks. So if you look at the like of Microsoft, it's struggling at its 50-day moving average. Watch this chart closely over the next few trading sessions. I think this is going to give one of the important steers on where this market might go to. But also similar with Tesla, again, struggling at its 50-day moving average, or Meta. So a number of the mega cap tech stocks that have led this rally over the course of this year are struggling. Indeed, Nvidia is yet to take out its highs on its earnings results of a couple of weeks ago. So mega cap tech, the leadership of this market over the course of this year, is struggling. And that's an interesting piece of price action you need to watch to get a sense of where this market might go to. That's what we look at each and every day. On top of all our key market trading models, our market timing models that we use on a 1 to 2 week basis, fear and greed models where we try and lean against the consensus sentiment in the short term in the market. When the market's fearful, you want to be greedy. And when it's greedy, you want to be fearful. As Warren Buffett said, talking about a long-term time frame, it also works in a short-term time frame where the market's much more emotional and much more geared into those fear and greed emotions. So if you're interested in following all that each and every day, please do take a trial to our rag. Simply click on the link below. We'll send you the daily rag for free for a bunch of trading sessions. All you need to do is put in your name and email address. We won't ask you for credit card details at this stage. Obviously, if you subscribe, which we hope you will, then at that stage we'll ask you for those credit card details. But if you're a subscriber, you should have the email in your inbox each and every morning between 8:30 and 9 a.m. London time. So what are we watching this week? Well, as always, a ton of stuff going on over and above what the models get up to and the price action that we discussed. There's a lot of macro data being released and some key speeches by central bankers and central bank meetings. One of those we're watching is the ECB later this week. What will they say about the future of interest rate hikes? Are they getting near towards the end of the tightening cycle? The market will be interested in that. The euro will respond to that, no doubt. Secondly, there's a lot of Chinese data out this week. We've already had the monthly lending data, but there's a lot of economic activity data out of China at the back end of this week, as well as a 1-year policy rate announcement on their MLF, medium-term lending facility rate. That's a key rate. And then over and above that, lots and pieces of confidence data, lots of bits and pieces of other macro data, including Michigan sentiment, amongst many others coming out of the US and across the Eurozone. On top of which, loads of inflation data, all eyes on US CPI later this week, as well as French and Italian the back end of the week. So that's it from us. That's your morning market hit for Monday, 11th of September. Thank you for listening. Please do follow us on YouTube. Simply click on the subscribe button, like and share on social media. We'd be grateful for that if you like these videos. And equally, follow us on Twitter, LinkedIn, and or Facebook. So thank you for listening. Stay safe. Trade well.